Jose, nice to meet you.
Likewise,
Yeah,
it's
to you
Karel, right?
guys. Yeah, Karel. Hey, everyone, we're
Nice to
live.
meet you, Karel.
Yeah, for those watching, thanks for joining in. Today I'm here with David from Babylon, Jose from Escher, and Valeo from Tower. So I think it's going to be very Bitcoin focused, BTC5 focused, and we're going to dive into some of the new stuff around that, both that Union is building, but also that you guys are up to. Maybe Valentin, give us a brief introduction about you and Tower and what you've been up to, and then we'll take it from there.
Sure, yeah, thanks, Carol. Jim, everyone, thanks for watching, by the way. Most of you might know me, Valeo, co-founder of Tower, but also advisor to Union. At Tower, I think, if you haven't seen us on Twitter, we've done a false job, but broadly speaking, we see BTC-Fi as kind of one of the last verticals that DeFi hasn't yet really nailed, in our opinion, and not fully finished. And we see BTC-Fi also being one of the biggest missing gaps in the current landscape of crypto, simply because so many Bitcoins are still completely dormant and not attached to any of the DeFi economy, which is absurd for it being the best asset. And so at Tower, we're working very closely with the Babylon team on working out, DEX primitives and other add-ons to those to really start fostering a more Bitcoin-focused DeFi landscape. What I mean by this is that I think people look at Bitcoin like Ethereum or Solana, but I think it's vastly different in philosophy and positioning, in history of holders, and also the landscape of who's buying it and who's developing it. And I think that you need to really advocate for specific financial tools to cater to Bitcoin to really unlock those dormant Bitcoins. And that's what we're working on doing.
Very cool. And Jose, I think you with Escher are kind of like right next to this, right? I think you guys are like probably one of the biggest LPs on Tower and one of the biggest baby LSTs. How was the Escher journey so far?
Yeah, in fact, we're the largest. No, we're the largest one on Tower and the largest LST. Escher is this DeFi hub for the multi-chain world, no? And we advocate from, I echo what Valeo said about Bitcoin. I think we are just starting to see the utility of Bitcoin in DeFi, no? And Escher, we are going to be positioned as a DeFi hub to unlock not only the Bitcoin per se, but also Baby, which is very, very, very related to the rewards that will come to the Bitcoin LSTs, no, and also the interconnectivity with other ecosystems.
Very cool. Yeah, David, I know you guys are basically the epicenter of BTC-Fi, and I think other use cases for Bitcoin as well with Babylon. I assume everyone's like familiar with it listening in, but maybe a little bit on yourself and Babylon too.
Yeah. Hey, thanks for having me here, Carol. So I'm David Shea. I'm a co-founder of the Babylon project. So the focus of the project is to build new trustless use cases for Bitcoin, and the emphasis is the word trustless, because if you look at the current situation, and Vallejo and Jose already mentioned this, sort of Bitcoin is the last vertical. It's the Bitcoin Fi's last vertical for DeFi to crack. I think there's a very clear reason why that is the case, that we still have not cracked. It's because if you look at DeFi based smart contract. Smart contract, the focus is to do things in a trustless fashion. So that's a smart contract world. Bitcoin is not part of the smart contract world. And if you look at the current connectivity between Bitcoin and the smart contract world, it's basically through two apps, WBTC and Coinbase BTC, the majority. And the total of them is still less than, of course, the emerging one, LBTC, etc. But total among all of them is less than 1%. 1% of a 2 trillion asset is still significant, but the total is 2 trillion. And so basically here in Babylon, we're trying to figure out sort of how to break this centralized bottleneck between Bitcoin and the smart contract world. And I think our first protocol, the Bitcoin staking protocol, I think that is an example of a trustless protocol that enables Bitcoin to participate in the smart contract world. And currently, we're building a new product what we call Trustless Vault, which generalizes in some sense this Bitcoin staking protocol to allow kind of Bitcoin to be used as a collateral, not only for providing security, but also for many other DeFi applications like lending, stablecoin issuance, etc. So I'm happy to talk about that a bit more later on.
Yeah, for me, I think it's super urgent to not necessarily only unlock Bitcoin, because I think Bitcoin utilization is high, just not in smart contracts, not in DeFi. And as long as utilization remains high in centralized contexts, crypto is just really vulnerable to a black swan event, right? We saw this happen before with Celsius and decentralized lenders, right? Everyone's kind of making money, but because it's all under custody and held by other parties, if there's one bad party in there, you can basically crash the entire crypto space. And so I almost see Bitcoin finance right now, not DeFi, but just finance in general, as being this nuke that we're sitting on, right? And if we have a black swan event and some of the biggest centralized Bitcoin lenders explode, we're gonna take this bull market out entirely. So actually moving that Bitcoin on chain, right, and getting it into kind of this trustless environment where we can audit it in full, have smart contracts take custody of it, I think it's actually of tremendous importance to crypto in general, right, to furthering the industry. And I hope that we actually can manage to make the transition. We kind of have the same mission with Union, right, by also removing intermediaries, bringing trustless infrastructure there, because we kind of think it's just mission critical to prevent black swan events in the end, right, and to scale crypto up. And otherwise, you always get this behavior: we grow a bit, we crash; we grow a bit, we crash. So very keen to basically, with Union at least, start working on those trustless vaults as well, and to see this evolve more. Not sure if Jose, go ahead.
No. Adding to that, I mean, I see part of the problem is that the decentralization, I think, is what is locking the growth. No, it's not that people want to not to do anything. No, I mean, I think they want to put to work the Bitcoin, but we're not there yet. No, and I think that's a core issue. No?
Yeah, I definitely think there's a large portion of Bitcoin holders that isn't utilizing their Bitcoin because on the one hand, they're afraid of this black swan risk, right? And so they're not putting it into regular centralized finance, but also kind of it's too difficult to get it on chain. And I feel as well, by the way, on chain, the different avenues you have for Bitcoin aren't that developed yet either, right? I think Bitcoin is a bit behind on stablecoins.
They're also not catered for Bitcoin, if you don't mind me jumping in. I think if you have an asset type that is so grounded on essentially libertarian values when it comes to freedom of capital, right? Not outside, just freedom of capital movement, and it has been basically destroyed or tried to be destroyed through centralized breakdowns so many times. I mean, Mt. Gox has been more than 10 years ago at this point, right? It's so long ago, and it's been so many cycles of anytime anything centralized really accrues a lot of value, it just implodes at some point. But it's also not compatible as an asset to just be introduced into TradFi, which might, while being centralized, at least it's battle tested, right? It's battle proof for 40, 50 years. It also doesn't fit into that because of its ethos. And so I think there's just this massive gap where all of these OG holders and old believers sitting on a lot of Bitcoin are the most sensitive to who do I have to talk, do I have to be approved by someone? Do I have to follow a KYC process? Which bridge am I trusting? Where is the custodian risk? And I think that a lot of these would be completely unlocked with trustless vaults and trustless bridging. Basically, you're both complementary products on the David and Carol. And I think that this is really the big unlock. It's just Bitcoin is fundamentally not copy-pastable to TradFi. The most unlikely to be used in new Fi, I would say, CFi, let's call it CFi, but also feels like, it's a half-baked version of it is in DeFi. And that's where I think this gap clearly lies.
Yeah. Hard question, David, but because Bitcoin is 14, 15 years old now. How come it's taken us so long, right? How come we still struggle to get trustless Bitcoin on chain? What were kind of the tech limitations that have brought us to it's almost being possible, but still not 100% there?
Yeah, so here we can learn from chains like Ethereum. Okay, So if you think about the key challenge of a chain like Ethereum or Bitcoin is to be able to verify and scale to external smart contract state. So in the case of Ethereum, rollup is a scaling solution, which means that Ethereum needs to verify what happens on rollup, on the smart contract rollup. So Bitcoin similarly, if you want to inject Bitcoin into a smart contract on another chain, then you basically need to be able to verify smart contract state on Bitcoin, the chain, because you want to connect the Bitcoin to a smart contract, right? So for example, suppose there is a liquidation event happening on a smart contract. You want to be able to use that liquidation event to trigger a withdrawal of Bitcoin from a vault, in the case of our technology. How do you do that, right? Bitcoin needs to understand what happens on the smart contract. And this effort essentially took 10 years to do, combining a lot of cryptography ideas to be able to do that. And Bitcoin has two big problems. One is the scripting language is not very expressive and also not very efficient in essentially expressing a verifier chain. So in the case of Ethereum, you use smart contract to write a ZK zero knowledge verifier to use that to verify smart contract state on a rollup. In the case of Bitcoin, it's very hard to do that because the language is very limited. And two, the block space is also very limited. If you combine the two together, it's almost impossible to essentially write a verifier on Bitcoin. And that is the problem that we recently cracked in the last few months, actually, last 4 months. A new technology emerged that basically cracked this nut. And that took many, many years of sort of Bitcoin scripting magic, cryptography developments, etc., to get there. Yeah.
Yeah. I heard you want to say something, Valentin.
Very fascinating technical rundown, by the way. But I thought about it from a standpoint of alignment and community and kind of crypto, I guess, as a space. And I think that, funnily enough, this is probably there's two reasons for that, right, David? I think the technical reason outlined by you, but I think also philosophically, I remember the time when there used to be only Bitcoin maxis and only Ethereum maxis in crypto. That was the entire community. And the Bitcoin maxis would basically stop any effort to do anything with Bitcoin that wasn't Alice sends Bob Bitcoin, right? If anything was more complicated than that or attached to that, it would not be in the ethos of Bitcoin. And then we had Bitcoin Cash, and we had Bitcoin Diamond and whatever I remember from back in that day. And at the same time, you had the Ethereum community, which had an overlap with Bitcoin, but even they would say, oh, the Bitcoin in my wallet, I will never use them. They're kind of like my gold that I bury in my garden. I will, I don't look at that like an asset that I might want to use in Ethereum. And so you had this interesting development where, and I kind of actually wrote an opinion piece about this. It's unreleased, Carol, but that's why I kind of thought about this in depth, is that there was this interesting phenomenon happening, I think around 2 to 3 years ago, where because of the stalling, I think is the English word, stalling, there you go. Because of the stalling of development from the core Bitcoin developers and maxis, interestingly enough, institutions started finding ways how to use Bitcoin more earlier than crypto natives, right? And that created those first grayscale funds, for example, for Bitcoin, or any of the custodial solutions or Bitcoin derivatives markets have been existing for a longer time than Bitcoin really has been existing in DeFi, with tremendously higher volumes, because TradFi saw this asset and said, okay, it's cute that the people that found the gold in California decided to bury it in their gold in their backyards, but we are going to build derivative financial tools the same way we did with gold, which dominates TradFi volumes to this day. And so in a way, this baby birthed by this one group of people was taken over by TradFi in actual like pushing of development and innovation. And just now we're coming back from our side through the extensive research David outlined, and are able to now build a crypto native solution. But we kind of went backwards in a way, and we're also overtaken. But I guess, parties that we never expected to push Bitcoin development, but actually did so.
So is that maybe also a reason that people are like more keen, like let's say OGs who used to hold Bitcoin in their wallet forever as like, I won't say the backup plan, but that's like the long-term plan, right? Like always stack sets, is maybe because like the highs of Bitcoin, like in bull markets, aren't like as high anymore comparatively to the bears as well.
So,
A reason why they might be becoming more keen. Like I'm thinking, if I know like Bitcoin's going to 10x in 2 years, like I probably won't do anything with it. But if now my reasoning is becoming, well, probably next bull it'll be like 40% higher or whatever, then actually getting yield becomes really important because my like upside is like diminishing every cycle.
There's actually that, and there's also a second order phenomenon, which is unit bias. So if you look into, if you think about crypto's general growth strategy, right, DeFi's general growth strategy, it was always expansion into people that don't understand yet, right? Like educating who isn't yet included. You will always find through every single cycle where we increase adoption from 2014 to now, that the new wave of people will immediately say, Bitcoin is very expensive, but XRP or Cardano or Doge or Papercoin are only 5 cents, 10 cents, a tenth of a cent. So what if it goes to 1 cent, right? Then I made 20 times more money. Like I think people really shouldn't underestimate unit bias in this comparison. TradFi doesn't have unit bias. So TradFi doesn't care if Bitcoin is at 100 or 50 or 200. And I think OGs, apart from their, I guess, net worth growing, don't really care about that either, which is why there's so much Bitcoin also flowing into single digit BTC yields. It's just a vastly different usage group than anyone that we're newly onboarding, which makes this, again, a fascinating phenomenon, because a product like Trustless Vaults might only have 5,000 users, but those 5,000 users combined probably hold 10% of the Bitcoin network.
True.
And there's a third one, which is competition. No, I mean, cost of opportunity. When more and more funds starting to offer extra yields to customers, you cannot afford to get out of it. No, I mean, even if the Bitcoin is going to double or triple in 2 years, whatever, if you have that extra yield, you can offer more to your customers. No, so you cannot be left behind.
Yeah, makes sense. Though we're very sniped by like the philosophical stuff, I'm still very curious for this Bitcoin Trustless Vaults and such. David, is it like relatively new cryptography research that unlocked it? Because I didn't read the full paper yet. Or is it more like an aha moment, and did we combine a bunch of stuff that we technically could have done like 5 years ago, but no one realized how to fit that together? Because it kind of felt like BitVM1 was such an aha moment, right? Where technically a lot of the knowledge was there, no one had figured how to stitch it together yet in the correct approach. It's the same for the Trustless Vaults, or is it really some like very recent innovation that allows it to be done?
Yeah, so I think the path to get to where we are today, which enables this Trustless Vault, is a very convoluted path. So maybe I'll just take 2 minutes to explain this path. We'll see why. To answer your question, can we could we have gotten there 5 years ago? So, so you look at one of the earliest Bitcoin protocols. People built trustless protocol in Bitcoin forever, actually since the beginning. Example: Lightning. Lightning is one of the earliest Bitcoin protocol. It's trustless actually, and atomic swap is another example. So all these early protocols, Bitcoin protocols, are actually only based on one very simple principle, which is you try to essentially figure out a mechanism whereby the external state that you're interested in can trigger a secret revelation, and that secret can be used to spend the Bitcoin. So basically, that's the simple mechanism. So in the case of the atomic swap, you basically trigger a secret whenever one side of the swap is done, and the secret will force the other side of the swap. So that has always been the approach by Bitcoin. In fact, Bitcoin staking, the protocol we invented 2 years ago, is also following the same approach, secret revelation. However, BitVM, as you mentioned, BitVM took a different approach. In fact, BitVM is kind of inspired by Ethereum, which is this idea of using ZK verifier and putting the ZK verifier onto the chain. And that's a very tough job for Bitcoin because of the reasons I mentioned earlier. And so that was a very inefficient However, it was kind of a proof of concept. It says that, well, actually, you could brute force it actually can be done. It can be done. It's like within almost the realm of possibility, but not quite. Not quite. We did some experiment on that approach, and it did not quite work out. So basically, the new approach that I think finally worked is in some sense combining the two approach to say that, hey, you can do the verifier, but actually you can do it off-chain. And the verifier result will lead to a secret revelation. And that secret, what's the Bitcoin? So you don't have to do any verification on the Bitcoin chain at all. And you can do it off-chain. But now you can sort of do this for general state as opposed to very specific state as in Lightning. And so the cryptographic construction that makes this work is based on a tool called Gobble Circuit. And it's kind of funny because Gobble Circuit is like 40 years old. It's 3 times the age of Bitcoin. So in some sense, the answer to your question is yes. We have all these tools already, actually. 5-7 years ago, we could have done that in 2017, I think. That was our estimation. The earliest we could have done this using the Bitcoin. I think it was an earlier upgrade of Bitcoin together with Gobble Circuit. But that's what research is. It takes many, many different paths, combine many, many different ideas. So I think there's a reason why it took so long.
Makes sense. I think garbled circuits are also used by Opacity Network for zk-TLS, which I feel also was like an issue I read about for like 6 years in crypto. Like, can we like get data on chain fully trustlessly without like an Oracle intermediary or some type of committee? And no one could solve it with like TLS notary. And then the guys at Opacity kind of figured out we can take this like relatively old technology and apply it to here and solve the problem entirely. So that's at least very cool to see. I think quite important when you're like a builder in crypto, because a lot of the core algorithms we have actually were kind of like invented in the 80s and the 90s, and they make a comeback here. Right, like same with Merkle trees, right, which were known for like a very long time and then actually made popular by Ethereum again. What do you think, David, like for the vaults? Like, how far away are we from seeing them actually reach production? Is it like still research stage, or is it something that'll quite quickly become like feasible? Is it something that you guys are building by yourself, or is this going to be like a wider ecosystem effort in the Bitcoin space?
Yeah, so we've done quite a bit of R&D already on this new Gobble Circuit approach in the past few months, and we've demonstrated feasibility. So evaluating a Gobble Circuit off-chain is like a few minutes. We can do in a few minutes. So the thing is that once you can get off-chain, okay, then the cost becomes much different, right? Because the cost on Bitcoin is totally different from the cost off-chain. Cost off-chain, you can benefit from a lot of things. Moore's law, cloud infrastructure, cloud improvement. You can do many, many things to improve things. So I think we have we are actually, as we speak, our engineering team is working at Istanbul on a proof of concept. I started doing this about 10 days ago. And I believe we could, our target is to push towards the test net by the end of the year, beginning of next year. And I think productization is pretty close. Quite confident.
That's very cool to see. Do we see like an initial appetite in the Bitcoin space for this? Like how's the reception been by, let's say, like these more traditional holders who are sitting on potentially billions and billions of BTC?
Yeah, so we're talking to many people, and I think there's definitely interest. And as I think Jose mentioned, right? So now that a lot of the Bitcoin in the hands of institution, and there's definitely a lot of appetite for institution to gain more value from the Bitcoin that they hold on behalf of their customers. So I think that is a very important potential source of customers there.
Oh, interesting. So institutions might want to use this too because they can keep their Bitcoin on Bitcoin chain.
Very cool. Is this something that you guys at Escher think of integrating and building further upon?
Yeah, no, definitely is going to be part of our suite of products that we want to offer any chain that connects through Union. I mean, we're also going to soon going to be launching our chain abstracted vaults. And you will see an announcement within the next weeks, hopefully next week. And as soon as we heard about the BTC vaults, we got excited. No, and I think they're going to be very cool products that we will be able to offer through our interface. Yeah.
Chain abstracted vaults. I love
Chain abstracted vaults. But
that sent me back to our white paper from 2 years ago. Very cool.
yeah, but this time is real.
Nice.
Yeah.
I guess that's when you guys did the vaults, Valentin, it was maybe too early in the market, right?
Yeah,
now we've seen
so.
like vaults get massively successful, especially around Ethereum. Like
we were literally a year early, and a lot of the required tech stack just caught up then, and then it became significantly simpler. When we did to get, I guess, viewers up to speed to why I was chuckling at what Jose said, we built the first cross-chain smart contracts that like ever in crypto. It used IBC. We had only the contracts on our chain executing without any deployment on Osmosis, but we had to restart the relayer every single block. That's just like how early everything was. It was incredibly unstable. It was really more of a proof of concept that was on mainnet than a really full-fledged institutional product, because the infrastructure wasn't there yet. But the concept got us incredibly excited internally, because I think abstracting chains away has always been the holy grail. Which is why I'm so excited about Union and so excited about like all the other products here. It always felt very weird to me that we as an industry discuss chains like cloud providers discuss Azure versus AWS versus Google Cloud. And then you talk to literally anyone who uses any of these actually, and they don't care, right? And it's completely composable. You have one website on AWS, the other one is on Azure. And it always just felt incredibly trivial to me. So yeah, we were a little bit early, Carol, and tech just wasn't there yet. But I think we released the white paper nonetheless, even though we couldn't monetize it and couldn't make a business case out of it. And we have heard that it has created like it has gotten people to think about it and also approach the topic. So while it isn't us, I'm very happy to see the vision of generally cross-chain vaults and chain agnostic vaults just happen. We call them layer staked assets, but
And timing is everything.
Yes.
You can think about a lot of stuff, and we're lucky right now that things just
it's great timing. I think so too, especially Union. I mean, if we would have built it with Union, we would have not had any headache, honestly. I guess, Carol, because you are moderating here, I'm going to release you from your pain of having to moderate. Let me ask you a question. How do you at Union see Vault specifically as a product when it comes to what you guys are developing in your technology, and then also Trustless Vault specifically from David's perspective?
Yeah. So for us, kind of the next 2 years, we're looking to broaden like the product suite that we have, not just like bridge connections, general message passing. And maybe we're building like BSN support. So for new BSNs joining like Babylon, they can leverage like Union to do payments, to basically use like our IBC connection into the Move stack, SVM stack, and EVM stack for setting up like their payments and stuff. But as a whole, like for the Union project itself, we're actually looking to get more into asset issuance. So that kind of ties a little bit like one layer below vaults almost, to for users and like chains that we connect to provide like various assets that have yield bundled in. We see this a lot with like new chains launching, new L2s launching. Now you see this a little bit about like chains choosing to have like a native USD stablecoin variant, right? And like taking the yield from that. I think you can extend that to almost any asset. And personally, I'm initially most excited to do this with BTC. That's why we're doing Oro BTC.
Did you see Mega BTC, by the way? Mega ETH and the LBT.
Yeah. So with let's see if Oro like it becomes a backing asset. Talking with Lombard as well, and potentially using it as like a yield source for them. So my thinking is like stables. I'm a bit bored by them in general. The yield at the moment is relatively okay, but it's like so tied to the US interest rate, right? And as that decreases, stablecoin yield decreases.
Except for Ethena. Except for Ethena.
Exactly. So Ethena might be in a very interesting position overall. But so I feel like Bitcoin itself becomes like quite a bit more interesting to use as like the default collateral, kind of the default value exchange assets that we use in DeFi over the USD. I realized today as well, talking with people about like why has the euro stablecoin not gotten as much traction as the US dollar one? People say like, yeah, US dollar one has higher yields. At the same time, comparatively, the US dollar has gone down by 15%.
Actually, even with the yield, it's losing.
Exactly. So technically, euro like annualized yield on it compared to US dollar is over 20%. So, like I feel like there's like so many projects building stablecoin chains right now, and like it's all on this hype and higher yields. But I actually think like long-term Bitcoin is a much smarter play here. And if I put on like my tinfoil cap as well, you see like Tether effectively like they earn yields in US dollars, which they then sell to acquire Bitcoin, right? Like that's what they're like hoarding in their treasury. So that I think is like the generational play still actually is to build like your business treasury on Bitcoin actually, not on US.
And also the single delta plays. So like having X token and get rewards in X token has been tried and tested in Cosmos for a very long time, and I think somewhat failed, or at least it has crystallized itself to only work if it's a blue chip asset. And I think Bitcoin's benefit here is that Bitcoin and Bitcoin yield just has to be so much lower than any comparative yield rate if it's a native Bitcoin to Bitcoin, because it's this category of, I guess, digital gold, right? Whereas any other asset that has asset native yield has to be offering much higher rates to get people to lock it up or even to hold it. And I think in that similar case, what's I guess to your case, Carol, stablecoins are, we are exposed to them. Carol and I, we do some angel investments together. We have some exposure there, but really it is kind of boring because I think a lot of people in crypto just don't look at fiat favorably, right? So it's kind of seen as not a favorable asset to hold. And at the same time, the only people that hold stablecoins in size are institutions, which actually, Carol, to answer your question, I think is why EuroC has zero adoption and USDC has all of it, because the reality is through regulation in our great continent of Europe, we've made it virtually impossible for any institution to do anything on chain, which is why none of the EuroC are used anywhere, and it's all USDC because Wall Street is all over us already.
Yes, I guess that kind of shows like the power. I don't say Bitcoin Twister's fault like circumvent regulation, but just because Bitcoin is like a decentralized asset, right? It doesn't fall under the same regulation that like government issued currency has. Because indeed, like kind of flag, European companies are literally losing out on yields effectively and market share because they're tied in on this. And so the question is, can the euro make a comeback, or is it Bitcoin that they go for? I know at least like in the Netherlands, Bitcoin is a very popular like asset to hold, asset that's collected. I think that's what's kind of like DCAting the most still.
And it gets even more fascinating if you think about anyone here. I think all of us probably landed in Istanbul airport at some point, I would assume.
Mm-hmm.
There's ads about Bitcoin everywhere, right? Because the lira is an asset that's just losing value so tremendously quickly as a fiat asset. And I think one thing that generally speaking just makes the adoption very clear is that the worse your fiat is, the quicker Bitcoin adoption happens. And for better or worse, in Bitcoin's case, the euro is a stable currency, at least so far. And that's why I think adoption on perception of institutional allocators and generally the public is not that big. I think we have a lot of freedom and technocratic nerds in Europe, which is where all of our Bitcoin and DeFi adoption comes from. Why there's so many protocols in France, for example, and in Germany from Berlin. But apart from that, I think that's just really gonna make EuroC a completely uninteresting product moving forward and not really have any big product market fit. And I think you are completely correct in assuming that Bitcoin BTC-Fi is going to be the gap to fill, because Bitcoin, hilariously enough, is more regulated for the average user to use than stablecoin yields for institutionals. And I can't believe I'm saying this. I love this, because usually the institutions get their cake first, and then after 10 years, the public gets access. But for some reason, we were able to turn it around.
Yeah, 100% agree on that. So overall, we have Bitcoin vaults launching, with us building on Bitcoin vaults. I guess the missing link then is, like, if we look at DeFi right now, has DeFi capacity to absorb that much Bitcoin? And what will actually be where Bitcoin is utilized the most? David, you kind of mentioned loans collateral, that's the first thing I think about as well, right? Especially as Bitcoin like stabilizes compared to like global other currencies. It seems like one of the best collaterals to use. Do we think it's going to be used in trading too much, or will we see like stables stay dominant there as well?
I think Bitcoin as collateral is a very natural first use case for the trustless vote, because, I mean, right, you hold Bitcoin, you can't do anything with it. So you might as well use it as a collateral to borrow stable to do things with it. That's a very natural use case. Perfect fit for Bitcoiners who never wants to sell the Bitcoin. And so that's where our initial go-to-market focus is with collaboration with lending protocols to connect Bitcoin vote to existing lending protocols. Yeah, so that's our current focus right now. But I think the cool thing about this technology is that it can be used with many things. And I think we're definitely looking forward to collaboration with partners like the ones here, with Vallejo, Jose, and Union, to think of new and creative ways of using the Bitcoin vote in ways that we can not think of in the first place. And so that's what we're looking forward to as a vehicle of conversation, of collaboration as well.
Nice. I guess like the only thing we use as collateral is technically now like the Oracle or the lending protocol kind of takes custody of the Bitcoin, right? Or at least has to be able to slash you. Do we have like a sort of next generation of oracles as well to make this safer, or do we think that like current lending protocols are mature enough that Bitcoin holders will trust their functioning? Personally, think like, I mean, Aave is like 70 billion right now, so I actually think it has matured quite a lot compared to like 4 years ago. Will we see like that integrated on Babylon, or is that more something that you let the like EVM ecosystems handle, David? Like the kind of Oracle data, getting that on chain.
Yeah, so we're focusing really on sort of integrating with existing big lending protocols, which already have good trust assumptions on the Oracle. So I think our job here is to essentially remove the centralization risk in terms of bringing the Bitcoin onto the lending protocol. And we would like to keep the trust assumption on existing lending protocols, so whatever Oracle they're using on the lending protocol. That's the philosophy right now in terms of the go-to-market.
I mean, to be fair, by deposit amounts, Carol, Aave is the 14th biggest bank in the world. So, differently from banks, that money actually exists. So, I think that the trust assumptions are fine.
14th largest bank in the world.
Wow. If you compare Aave in deposit size to banks, it would be number 14, but it's also real money. So really, it's a little bit higher because at least, we are, I think, 5 minutes before hard stop, but 2020 Banking Resolution Act changed the amount of cash needed to be held from banks from 5% to 0. So, but I think that's a different topic.
Wait, they reduced it from 5. Okay, yeah, I need a different topic.
It's 0. It's actually 0 now. Yes.
Yeah. Jose, do you have anything to add to all of this? Because I feel like you're like literally in the epicenter of this. It's kind of like a DeFi vault builder. You combine all these Legos yourself. You must be like very excited by like the potential for this.
Yeah, I think right now we are excited of what we're seeing that is coming. No, I mean we are working on some products with the things that we have right now. But we can wait to see how the final architecture of the BTC Vault is, so we can see what we can do with it. No, but I mean, lending is of course the first one. Doing looping strategies and yeah, we're going to be able to do very interesting stuff. No, yeah.
Very cool. Then, guys, since we're nearing the end, what are you kind of like most excited about in crypto right now? Like, let's say outside of BTC-Fi, outside of, for you, it's going to be Hyperliquid.
I was about to say that's going to be
no
easiest
Hyperliquid, no perps. But what's like has nerd sniped you right now that you want to drop as alpha for the listeners?
Man, you just take away Hyperliquid for me, which is like the most obvious. Okay, well, if it's not Hyperliquid, I would say Ethena, honestly. I think that with the interest rates having to be cut at this point, just they're not going to stay up. Just there's no chance, 0 chance. a algorithmic-ish stablecoin like Ethena is going to be exponentially more attractive. And the funny thing is, I very much like what Guy is doing with Ethena, because they basically bootstrap growth with this yield and this novel idea. Then they created institutional-backed products, which are, just USDC or USDT like stable coins, but with significantly deeper integrations into TradFi. And then they are going back to basically saying, look, guys, if the yield rates are dropping, all of your stablecoin issuers made a mistake. If you're Circle and Tether, you're literally going to programmatically lose revenue. If you're any of the ones that give it to users, you're programmatically going to use your edge. Our basis trade can cover another 10 billion, 20 billion, 50 billion of deposits, and it's yielding, 5, 7, 8, 10%. So yeah, I would say Ethena.
Yeah, I tend to agree with you, except once again, it's a staple. So I is fundamentally more boring.
Come on. You can't say, okay, what are you the most excited about except for all the cool stuff? Come on.
I mean,
I want to say something different. And this is not a political statement, but the changing attitude in the US in the regulation of crypto, that got me excited. And I think that's going to unlock many opportunities. And I think it's like the big domino that is going to let the world get into the idea that this is the future. Something that we know, but they struggle to understand.
Makes sense.
Sorry, I will say the following, okay? In the past 4 months, past 6 months, my mind has been entirely focusing on cracking this problem. And after 5 years of working on this, cracking this problem is like my biggest thing. So I just am excited about the ability to bring Bitcoin into the smart contract. Well, let's just stay with that.
Acceptable exception, I think.
Let me then ask differently for you, David. Now that you've cracked this problem, how do you reward yourself afterwards? Like, what's the relaxation that you do at the end of the day?
I haven't got to that relaxation phase yet.
Not yet.
I'll think about it.
All right.
Going to this podcast with you. That's my relaxation.
Oh, come on. God. So smooth. God damn.
Yeah.
Okay, Carol, what about you before you hand it over?
I thought, for a brief time, football.fun was kind of fun. So I've been thinking to see if, in a weekend, I can invite open app like that. I think I shared that idea with you. So maybe build something on the side, and of course my own project, which excites me the most and takes up all of my time. This was a trap, of course. I was hoping.
Did you see what he did to us, Jose? They told us to not be able to name our own project or BTC-Fi, and then the David and Carol
Exactly.
product. Unbelievable.
It's a total setup. No, guys, thank you so much for coming in and educating me a bit on this. I'm not sure if I'm going to see you, David, in Korea for Korea Blockchain Week. Valentin, I'll see you over there, and we'll discuss some stuff. But otherwise, we should see if sometime after, maybe relax with a whiskey or something to celebrate.
Great. Fisher will be there, so try to hook it up with him. Fisher, co-founder.
I'll try to meet up with him. Yeah. All right, guys. Thank you so much for.
Thank you. Thank you very much, everybody.
See you,
Jose, Lejo, Kara.
David.
Thank you. Bye.
Thanks,
Ariel.
Cheers, guys.
Cheers, mate.
Bye-bye.
Bye.